Hello and welcome to Trading 5 Talents. In this video, I want to go over another idea that I have been looking at over in Option Alpha regarding this automated trading. And all of my previous videos with Option Alpha have been dealing with iron flies. And so that's a four-legged option strategy where the short call and the short put are the same strike, and then my long call and long put are, in my case, 10 strikes further out of the money. And basically it works really well when the underlying price stays relatively constant. And I've been doing that with some success, and then most recently it's been pretty unsuccessful. So I have been looking at a couple of different things. Number one, I've been trying to figure out what the best take profit level is. And I have a video on that to hopefully help in that decision-making process. The second thing is being in the trade a much shorter duration. Now that is either taking profit at a smaller amount or just having shorter DTEs. The other thing that I'm looking at is the trend. So trading with the trend, whether I do a directional iron fly or a directional broken wing iron fly. And I just made a video on that as well. So in this video, what I wanted to do is, instead of looking at an iron fly, I want to look at a credit spread, which is basically half of the iron fly. But I also want to base it on direction to see if we can lower our risk while also making, consistent profit. So I've got a few bots that I have set up here. This is all paper account, but I just wanted to introduce them here so that you can, hopefully follow along with me, and then, we can build this bot out together to see if we can't get some consistent profits by selling options premium using Option Alpha. All right, so here are the four bots that I'm looking at. So let's take a look at the SPY chart, candlestick chart, and then see what I'm trying to do, and then we'll see how the bots are made. All right, here's a 15-minute candlestick chart of SPY. We've got a yellow line or an orange line, as well as a blue line. Now, in a previous video, I was using the EMAs, the 5-day EMA and the 14-day EMA. What I'm doing here, and I'm not exactly sure why I made the change, but I'm just using the SMAs. So this is just the simple moving average. Again, this is not an original bot that I'm making. There are several credit spread bots. There are several trend or following the trend bots on Option Alpha. This is just my take on it. So I saw the SMA being used, so I decided I was going to use the SMA with this set of bots, even though I'm using the EMA on the previous set of bots. The orange line is going to be the 5 SMA. Again, the time frame is set to 1 day. And then the blue line is the 14 SMA. Now, I'm only going to be using one of them per bot. I'm not going to be using both of them. So in one bot, I am looking to see if price is simply above the 5 SMA, or is it above the 14-day SMA? That's all. Or is price below those? So if it's above, for example, let's say it's above right here, price is above the 5 SMA, it's going to have a bullish trend. If it's above the 14 SMA, it's going to have a bullish trend. If we go, let's say right here, price is below the 5 SMA, it's going to have a bearish trend. If it's below the 14-day SMA, it's going to have a bearish trend. So that's all I'm using these orange and blue lines for, is just determining the trend and using the price's placement relative to where those lines are at, whether it's bullish or bearish. So let me show you what these bots look like. Okay, so let's take a look at this blue one right now, and we'll take a look at the scanner. And so here, one thing that is different is I am using a symbol loop. So I'm not using just SPY. If I go over to the inputs, if I look at the symbol input, these are the symbols that I would be trading: SPY, GLD, DIA, IWM, and QQQ. Okay, so these are index ETFs, and then gold is obviously a gold ETF. And that usually trades independent, or it's non-correlated with SPY. Right, so I'm trading all of those. Now, if the bot has less than one position with that particular symbol, go down this decision logic. First of all, is the price above the SMA? And what SMA is that? Well, that's over here on the input. And then in this case, it's going to be the 14-day SMA. So is price above it? Then it's going to open a short put spread. If price is below it, then it's going to open a short call spread. So what are these short put and short call spreads? Well, if we take a look back here at option strat, this is the standard iron fly that I've been running, 10 strikes wide, and the center strike is just right where the market is, okay, right there. So 439 is SPY at the making of this video. 439 would be the center strikes, 449 long call, 429 long put. Right? That's the iron fly, but we're looking at credit spreads. So when we were talking about a short put spread, what we were thinking is that it was a bullish trend. So if I take this one off, so remove that one and remove this one, so we only have puts, we are in a short put spread or a bull put spread or a put credit spread. I mean, it's got all three names to it, but I'm just referring to it as a short put spread. All right. Now what we want is we want the price to stay above the current price. All right. So that's all a short put spread is. So what were the settings of the short put spread that we were looking at? Right here. So if we look at this, we got the short put spread width, we got the short put, and then with the position size and so on. So let's take a look at what those are. So first of all, the short put delta. So I'm looking for a 30 delta on the short put. So with a 30 delta, that gives us roughly a 70% chance of being profitable. And it translates to about 5 strikes below the current market price. Now that depends on, several factors, but that's approximate. Now this would be the short put spread width is just 2 strikes below the short put leg. The other criteria I have here is the minimum price for the bid. And that is going to be 0.3. And then I'll explain that in just a few minutes. So going back to option strat, let's see what this would look like. So with a 30 delta, it's going to be about 5 strikes wide. So let's just say 5 strikes. So 439 will go to 434. And then the long put was just 2 strikes underneath it. That would be 432. So it would look like this. Oh, so what was the expiration? The expiration was at least 3 days. So at least 3 days. So that would be this one right here. And you can see right now the credit is only $3. So obviously we wouldn't do that one. So if we open it up the next day, the next open market day would be June 20th. So that would be 0, 1, 2, 3. That would be this one right here. So if we were to open it up, you'd see you'd get $20 for this. And then the margin or the collateral that you need is about $200. So since this is a bullish play, we just want the price to stay above our short put, 434. So as long as it stays anywhere above 434, we are good. Now the opposite can be done if we do a short call spread. So here we're going to do a bear call spread, just like this. So let's say the price is at 439. So with the bear call spread, we are going to be about 5 strikes higher than the current price. So let's say 444, and the long call is going to be 2 strikes higher than that, and it would look something like this. So if we saw that our bot was signaling a bearish trend, then we would do this short call spread. We just want the price to stay below our short call, which is 444. So as long as it stays below 444, then we're going to be profitable. So it needs to be 2 strikes higher. So something like this. All right, so that is how the bot is set up. It's very simple. Now, the bid price. So with the bid price, that is going to be the minimum credit that we're going to be receiving. So I didn't want to have a credit less than $30. So that's why I put that bid price minimum in there. You can change it to whatever you want, but that's just personal preference. I didn't want it less than $30. With the exit options, I'm just looking for 25% of the credit or within 1 day of expiration. So these are pretty short dated credit spreads. I'm only looking for a little bit of profit. And so I can just get out of the trade immediately. Now, once I'm out of the trade, then the next time this automation runs, which runs every 15 minutes, then it's going to open the next trade. So I can have up to 5 positions. I've got 5 different tickers, so I could have all of them running at the same time. And once, let's say the SPY closes at the next 15-minute interval, it's going to open up another SPY credit spread based on the trend. Okay, so that's what this one does, and it's doing it based on the 14-day SMA. This one right here does the same thing, except it's going to be based on the 5-day SMA. Everything else is the same. So that's all well and good. It's a very simple type of bot based on the trend. And the next thing I want to do is to make sure that I am not just catching the top of a trend or, for example, going short when it's at the bottom of a trend. Okay, so if we're back here at our candlestick chart of SPY, look at this right here. It peaks up here and it's starting to come down. So if it opened up the trade around this time, we would still be going long because it's above the 5-day SMA, it's above the 14-day SMA. So we would still want to enter a put credit spread. We want it to go higher, but in fact, it's not. So that would be my concern with this particular strategy. So I made two more bots, one based on the 5-day, one based on the 14-day SMA, except I threw in an RSI check. Now the RSI is a relative strength indicator, and that's shown down here in this graph. So if the RSI value is above 70, it's considered overbought. And that means that it's likely to come back down. It doesn't mean it will, but it's likely to. If the RSI value is below 30, then it is oversold and that it's likely to come back up. Now, once again, these aren't 100% accurate. You're not going to be right every single time. However, it is a pretty good check that you probably shouldn't go long when your RSI is above 70. You probably shouldn't go short if your RSI is below 30. So with these next two bot iterations, if the price is above the SMA and below 70 on the RSI, then you can go long. But if it's above the SMAs and above the 70 RSI, then to not enter the trade. That way, I'm preventing the long position when you're right up here at the top because it's most likely to come back down. Now, will that work? I'm not sure. That's what I'm testing. So I've got the 5-day SMA trending credit spread with and without the RSI check. And I've got the 14-day SMA trending credit spread with and without the RSI check. And that's what these are right here, trending credit spread, so TCS, right? I will turn these on before market open, the next market day, and then I'm just going to track their progress. So how confident am I that this will work? Well, I have been trading a variation of this in paper, and I want to show you those results right now. All right, it's this one right here. This is the trending credit spread, but it's based on the 14-day SMA. There's no RSI check right here. And so as you can see, 35 positions have been closed. And I was surprised that it has a 100% win rate. And you're getting about $19 per win. So let's take a look at these positions right here. Starting down here, expiration of June 9th. So for GLD, this was a bearish trend that was indicated. So a short call spread, it made $34. Here it made $47. It made $11. So the wins are very small, but obviously they add up. So in one day, it's closing, these 5 trades right here. The next day, it's closing 3 trades. The next day, it's closing 4 trades. This one is only closing 1 trade on that day. But as soon as one closes, it opens up the next one based on that symbol. So here, the premiums, they're all over 30 because, again, that's my minimum bid price. And the risks are right here. So it's a very, small risk compared to $400, $500 that you would have in the Iron Fly. So you can have more of these open. You're getting small premiums, but you're only taking a fraction of those premiums. Now, what I found though is most times, let's go up here to, I guess, the most recently closed one right here. So I opened it on the 15th and I closed it on the 16th, right at market open. You can see it closed for 76%. I was only going for 25%, but because it couldn't close the same day because the PDT protection is on, the pattern day trade protection is on, then it couldn't close that same day, even though it reached 78% on that first day. So the next morning, because it was still over 25%, it closed and I was able to gain 76% of that credit or $38. So that's definitely some optimization that needs to be made with this bot, is that they really get into profit very quickly. And if you could day trade these, then it would be great. But in any case, I want small profits, 25%. Oh, by the way, there's no stop losses on these either. So basically, you have to be willing to lose $150 to make $12.50, so 25% of that. So is that a good risk to reward? It's probably not the best, but as of right now, I'm just testing this trending bot to see how it works in trends. And really, I want to see how is it going to work once we get out of this bullish trend that we're in. Once it peaks and starts going bearish, I want to see if it's going to keep up a very high win rate. And if so, then we can look at the risk to reward and see how we can optimize that. Otherwise, I think this is very promising based on everything that I've seen so far with this trending credit spread. So please be sure to subscribe and turn on the notifications so you can follow these results to see if this is something that can complement the Iron Fly bot that I've been trading. The other thing I wanted to mention with the RSI check that I forgot to mention is that I wasn't sure if I just wanted to skip a trade if the RSI was, in the overbought or oversold region, or if I wanted to flip the trade. So instead of going long when the RSI was too high, then just go short. That could be an option. I'm not sure. Right now, I'm just testing the trend indicators to see if that is consistent. If it is, then maybe I'll fiddle with the RSI check as well. But otherwise, if you have any questions, then please leave a comment down below, and I'll try to get back to it as soon as I can. Until next time, trade wisely and take care.